Welcome to another Cardano price prediction for 2025. Today I'm on the weekly chart rather than the daily chart, just because I want to give you a different perspective on this chart. You will probably see this video in 2 days, so if the price is a bit different when you see this, you'll know why. What I want to show you in this video is the long-term potential of Cardano, and I also want to talk about my predictions and see if they could actually happen. First, let's look at the short-term potential of Cardano. I believe Cardano bottomed right here in a C wave and is now ready to go in a third wave. What I want from a third wave is basically to do something like this. So I really need the price of Cardano to go above this level at least. Actually, not even that level. Right now, we just need to get above the resistance levels. That's what I am concerned about. If we don't manage to break at least above the 0.618 level, then we are probably going to hit another low. And trust me, that won't be that bullish. We are in a downtrend right now, and we kind of need to break out very soon, because otherwise, if we keep going down and if we keep putting in lower lows, we'll just get to this 22-cent level, and then this whole move will be invalidated. So we need to do something very, very soon, or at least go sideways for a few weeks. But no, we don't need another low. The ABC is complete in my opinion. And that's it for the short term. Now I want to talk about the long term potential of Cardano. What I want you to see is that in the previous cycle, I took the Fibonacci extension of this high and this low, and as you can see, it went to the 1.618 and the 2.618 in the previous cycle. Right here, when we thought Cardano topped, we were rejected by the 1.618 level at $2.16. We actually got above this level, but then we got rejected and we stayed below it for a couple of weeks. I believe that's around 4 months, something like that, before we got above it and we tried testing the 2.618. We did not quite get there, but we were close to it. Also, this whole structure was also a 5-wave setup to the upside, and is looking very similar to what we have right now. Here is the first wave, then the second wave. Now we got a first wave, a second wave, and now I really want to see a third wave. Before I talk about that, I want you to see why I have these price predictions right here for the next bull cycle. So a bullish stop would be at $5.30. You saw in the last cycle how the Fibonacci extensions were not really respected. They were, but the price still went above them a bit. So if something similar was to happen, we could get a high above this bullish stop prediction I have for my bullish prediction, and we could see the price go to like $6 before dropping in the bear market. Or if this was to actually just copy paste itself, we could test this level in the third wave, like I have it on this chart right now, and we could go above it like we did here before going in a fourth wave and going below the bull market support band, which will probably look something like this, let's say. And we'll go below it for a few, let's say, maybe 2 weeks. Maybe we won't even go below it for too long. Maybe we just need to get a few weeks below it before going in a fifth wave and going to the maybe $8 level. Also, there's another thing I want to show you. These are the Fibonacci levels of this high and this low right here. And as you can see, in the first wave, in the previous cycle, we did not get to the 0.236 level. But in this cycle, we actually got there, and we did not touch it, but we got closer to it than we got in the previous cycle. So does this mean this cycle is more bullish than the previous cycle? I don't know. I don't want to say that it is, but it might be. Obviously, not financial advice, but judging this chart, at least by the Fibonacci extensions, what we have right now in this cycle is looking stronger than what we had in the previous cycle. Also, look at this. In the third wave in the previous cycle, the price got above the 100% extension of this previous high, and if this was to repeat itself, we could see something like this. So yeah, the price getting rejected by my bullish top prediction in a third wave, and then after getting above the 100% extension of this previous high could happen if this chart was to copy paste itself. And honestly, right now the chart looks very, very healthy, so I don't see why that could not happen. As long as we keep the, let's say, 22-cent level, then I have high expectations for this cycle. So wait a minute. Here we did not get to the 2.618, but we got close to it. But wait a minute. If this previous cycle was weaker than the cycle we have right now, and in the last cycle we did not manage to go to the 2.618 extension, even though we got close to it, does this mean in this cycle we might be able to touch it? Again, not financial advice, but it is probable. So we could actually get to $8 in this cycle, in my opinion. It is possible, in my opinion. Also, take a look at this trend line I have right here. This is the first high, this is the second high, and if we were to touch it again, in my opinion, the cycle will end in October of 2025. So if we were to touch it again, we would hit the $8 level, and we would be close to the 2.618 extension and my very bullish top prediction for this cycle. So things are looking good as of now. Like I said, if we don't break below the, let's say, 22-cent level, then I expect to go in a third wave and break new highs. At least until maybe, well, actually, I'm not going to say until when because I don't really know. But if we take the end of the second wave from the last cycle and we check how long the third wave took, we'll see that it took around 238 days, which is 34 weeks. And let's say we bottomed in the second wave right now, in this week. If this right here was to repeat itself, we would finish the third wave by February of 2025, maybe March, maybe something like that, maybe January, something like that. And the price, in my opinion, should be at the $5 level by February of next year, at least according to what happened in the previous cycle. Of course, there are still like 34 weeks left of this. And as you can see right here, the third wave did not really start in a big way. I mean, we just went sideways for like what? 8 weeks before we actually did something, before we did an impulsive move. So yeah. Also, as you see in the first wave of the third wave in the previous cycle, we got above this level right here of the first main wave of the cycle. So yeah, going above this level right here in this first wave, like I said, needs to happen if we want to copy what happened here. So I want the first wave to go to at least this line right here, the 0.236 extension, and then maybe get rejected by it and go in a sub-second wave of the third wave before going in a third wave of the third wave. So yeah, right now things are looking kind of good in my opinion. You can also take the lows of the cycle and maybe predict where the next low will go. So I don't know if I should take this low right here because this is the pandemic low. I'm just going to take the low that happened before the pandemic, which is this right here. And the low that we got in this cycle of 22 cents. And if we take a look at this trend line, actually before we do that, let's see how long it took between this low and this low right here. As you can see, it took around 1,645 days to hit a new low after the bull market. As you can see, it took us 1,645 days between this low and this low right here. So let's see where that would put us for the next low. If we take this and we go into the future, the next low should be in December of 2027. But if we take this low right here, which is the pandemic low, we'll see that there were only 1,200 days in between these lows, which would put us in September of 2026, which in my opinion is a way more realistic time to hit a bear market low than December of 2027. So I think I'll just take this low right here, but I will keep this trend line here because it goes better in my opinion with what I have. If we want to take this low right here and this low right here, then the trend line would look something like this. And I mean, from $8, where I think the price might go, we would only go down to like the $2.70 level, which is what? 67 to 68% from its all-time high, which is not a lot compared to what happened in this cycle. We got a 93% correction before we started going in this first and second wave. So yeah, a 67% correction, I don't know how to feel about that. I don't think that's going to happen. I think we'll still get a 90% correction in the next cycle, maybe 80%. So I'll just keep the trend line right here because I think it's better to keep it here. It looks better on the chart and it looks better in general. So let's say we get to this level right here. And let's say we top at around $8. Last cycle, as we have seen, we went down 93%. In this cycle, however, if we were to go down to this level at this trend line, we would actually go down 88%. And that would go very well with my trend lines and everything, actually. So could we see something like this? Could we see the next bear market low being around $8? Maybe, maybe not. I don't know. But by the way this chart is looking right now, I believe it is possible at least. Anyways, that's all I have for you for today. If you enjoyed this video, consider checking out my Patreon. I will start posting some bonus content on there as well. So if you want that, make sure to check it out. And if you liked this video, consider subscribing to my channel and liking this video. Anyways, I will see you in the next one.